Hey traders, your weekly deep dive into market structure, liquidity traps, and execution strategies that actually work. If this is your first time here, I'm Sean, a professional trader with a strong background in the financial markets. I've been actively trading since 2017. My background as a Canadian CPA gave me a deep exposure to financial markets, particularly in institutional and risk management space. I work extensively with major financial institutions, gaining first-hand insights into how market functions behind the scenes. I saw the impact of the 2008 financial crisis up close as a young professional starting out my career, how institutions operate, how risk is managed, and most importantly, how market making activities influence liquidity and price movements. That experience gave me a completely different perspective on trading, one that retail traders often don't have. Now, I use this knowledge to help traders like you understand market context, institutional traps, and how to position yourself from high probability trades. Every Wednesday, we break down the most important lessons in the market structure, execution, and psychology. And today, we're going to discuss how to spot market traps and trade fake out like a pro. Today, in today's session, we're going to discuss why the market traps traders, psychology and manipulation, understanding why breakout fails and breakdowns reverse, how institutions trap retail traders. Before we dive in, if you have not subscribed to the channel, please subscribe now. Let's get dive into it. Market have a tendency to make the move and pretend that it is going in a one direction and then suddenly move in the other direction. And as a trader, sometimes it gets difficult that how do we identify what is something real, what is the fake, and what is the best way to identify those trends and make money out of it. Let's assume that we don't know what happened today and we want to make this more interactive. So if you have any questions or anything you want to share, you can ping it and then we can discuss it. So let's go to the SPY chart. If you look at it, SPY in August, it made the bottom. And then we know the SPY is in the uptrend here. This trend get matured on this area. Then market was looking for a direction from how many months? From November to February within the same range. And I was talking to my mentee this morning, and I think I mentioned into my writing as well, that when you identify that index or a stock is in the range, never buy on the top of the range and never sell in the bottom of the range. These two are called the traps. And trap doesn't mean that it's going to happen on the same day. Sometimes those traps happen after maybe a smaller consolidation. And that's why we call that nobody knows what will happen, but you can prepare your scenarios to what can likely happen. And as a day trader or as an intraday trader, our job is to react to those situations based on the market movements. So you do not need to predict, but you need to react based on it. So now, when this trend started, what we did, we made very big red candle. And if you remember, I think if you have forgotten, always put your charting there. I have one chart where I can put the notings. This is basically a FOMC sell-off. So you don't forget things because our memory is short and we forget that. And if you remember this gap, somebody tell me what is this gap? Exactly. This was the election day gap. Assume that you are driving your car and when you don't know where you need to travel, right? You use the help of a GPS. And through that navigation, it will help you to drive from one place to other. Similarly, this is our map that where prices are going and volume are going. We need to chase them, but we need to chase them in a way we understand those locations and understand that why certain things happen for which reason. And once you better able to appreciate those contexts. So now if you look at it here, there was another gap up. But what happened here? So market went up, consolidate, failed because of the FOMC, came back with the election day gap, moved back up, made the higher low, came back down. Again, election day, this support held, moved back up, couldn't make the new high, down. Again, I think this was basically the, somebody remembers or I need to tell? This one is the trade tariff. Exactly. So Harvey, you're right, is a trade tariff. And this gap down, this gap down was a deep seek, right? So now what we see here. So what we see that market move up, down, consolidation. We all these know this is the sell area, this is the buy area. Move up, made the new high, and but yes, 2 days before today, leave the yesterday. Day before was really strong in F after the FOMC minutes, and look at the beautiful long candle. But what happened? That means that there was a fake move by the market after the real trend likely be starting, or at least a new trend is starting after these 2 days, where market was failed to make the new high after the FOMC minutes. And if you look at the triple Q, and if you look at it here on the weekly chart, so if you look at here on the cash session, new high made it. But if you look at the NQ, and that's why it's important for to looking at all different instruments, because there's sometime inefficiencies is one. So if you look at the NQ, so NQ high is after the election one in December is 22,451. I think this was after the Christmas or is the January 1st one. So this was high is 22,451. And even though 2 days ago SPY made the new high, but Nasdaq or NQ was never able to claim the new high. And they give it one more day, then another day, today, and I think that's what I'm saying. So if you look at the 30 minutes chart, and now you will see what I'm saying. And if I remove the pre-market data, and this was the area I was looking at it in the pre-market, and I showed it here. So if you look at the pre-market, so when the market reached around 8 o'clock here, I basically showed it here, but it squeezed me out here and then moved back down. And then if you re-entered, because your risk is over the highs, I didn't swing that long, but if you have good job, you can able to make a little bit more money, because that's we call the trap. Because trap was people were thinking that this is all-time high and blah blah blah, market going to make new high. We don't know whether this is going to continue, but at least for new trend to begin, we can easily say that once this sell-off begins, so you look at the pre-market closed all the way here. The cash session started here 9:30 and is never able to claim it, and it just straight down, and now is getting more accelerated because it's not able to hold the yesterday bottom, and now it just keep coming down. Let me look at some of the questions. So Paul, can be a real breakout? Yes, it can happen, a real breakout, but in order to happen the real breakout, you need to see the real breakout. So since you do not see the real breakout, there is no actual real breakout happen, right? So if you go into the triple Q, so for instance, if you look at the SPY, okay, and if we go to 5 minutes of SPY and remove the pre-market data just to not to have any noise. So if you look at this day, okay, this was the day, February 19th, if I am correct, February 19th, yes, Wednesday was the day where the FOMC minutes came in. What happened? You see a clear uptrend. And when it's breaking out and making the new high, people went long. All the traders went long. I went long because I see the structure. And what is the structure here? There was a structure here clearly with the low risk entry, and you can see a breakout here happening, right? But what happened next day? Next day was there's no breakout. It's straight up, 3 bar play, down leg, up to the VWAP. There should be a VWAP here. It's not on my chart, but if you go back and see, there should be a VWAP. What happened here? Again, rejection, leg down, then consolidation, then the consolidation, move up, and then we saw today, right? So now how we read it in order for us to make it. So see, in the grand scheme, the point is that even if you miss this 2 days move, this is not the end of the world, right? Because when you see when the trend happens for multiple weeks, right? When this short-term downtrend happened, this also happened for 3 weeks. Now, when this range happened, this range is still under intact, which is for weeks. Can we say that this is the breakout? No, we couldn't say the breakout. We could just say that the range top hit and it fails. Now the next top is gonna be a gap down on the Monday, likely, and we might gonna see retest. Or it's possible that we can just see here 600 and Monday gap down and then bounce back up with this range. But what I'm saying that the is just like a roof and the resistance hit, there is no more momentum, is shaking out. Whether it's going to break this range and we see a downtrend, We don't know. But at least we can say that market has proven again that market is in the range. Do not try to buy the breakouts, or do not preempt that this is the bottom. When there is a bottom, you will see the bottom. Let's see any other questions. All right. And we can discuss the other things as well. But I think I just wanted to give you a flavor that why this is so important for individuals to understand. As a new trader, a lot of people or a lot of new traders get confused when they say that they're doing over trading, they're doing a revenge trading, they're not making money. After the facts, they look at the idea and they say that their ideas are working fine, but they still red and not able to make money. So there is a couple of things you need to reflect on it. A, where is the error? Whether you are able to get the market context and ideas right. If you are not yet on that spot where you're able to pick and get the right ideas, just likely be there high probability that your execution is always going to be the challenge and you're always going to lose money because your first thing is not right. Once you have the strategy and the market context right, then the next stage comes the execution. And once the executions is intact, you're good in execution, then the third come in is that the your consistency, your profitability, your psychology. But the first idea is your context, whether you're able to get the right context, you're able to get the right, you have a right knowledge, understanding of technical analysis. And if you are lacking in that, no other things can help you. So when I see people, hey, this is the 3 bar play I'm going to short, and the same 3 bar play somebody tried to do maybe 2 days ago, then most of the time you're gonna get fail or chopped out. Why? Because you don't have a right understanding, you don't have right context. So just recognizing the ABCD pattern or other strategies and pattern, it may help you, but it may not give you a consistency unless you know the concept. So now look at this pie. It clearly holded 605. And why? Because if you look at it here, if you look at it 30 minutes, and you can see clearly established that on February 12th, this was a zone. Does it mean that this is a strong support? No, not necessarily, because we still in the range. So never try to preempt the long when you're in the middle of the range, because the most choppiest price action and you people lose more money when they expect that any support is going to hold. Because you are in the middle of the range, just think from the perspective of the investors or traders. If I have a 50,000 or $1 million to invest, would I be buying here? The answer is no. Maybe I am not buying here because I know that this is the range and the low of the range is 590, or maybe the key level is 600. Why would I buy in the middle of the range when there is a force coming down with the high speed? You do not need to come in the front of the highway traffic, because if you're going to come in and try to protect this, you're going to lose it. So you need to wait for the range to come down. Now we busted the top side. It's hard to get the buyers on the short side because it couldn't hold the yesterday low. Now what ranges are in play is this choppy range. Just remember that how difficult it was to trade between February 11th, February 10th, February 4th. It was so choppy that you're gonna get the one price action and then it's just chop around. Look at those price action. This is really choppy price action. So now the price is going into that domain where it's really hard to make the trades unless you see the price coming down here. Then you can say, okay, whether it holds, bounce back, or it just breaks down. So guys, any question? See, so what is ORB? Or ORB is the opening range breakout. And I think that's why a lot of traders make mistakes, because the making money is not easy. It's not just any ORB help you to make money. Now you need to ask, okay, what kind of a stock you are trading? Are you a large cap or small cap? Okay. Even for instance, if you're small cap, I don't specialize in small cap, so I don't comment. But if you have a trading on the mega cap like a Tesla, NVDA, those stocks have a dependencies on SPY and triple Q. So unless they have the earning, they have the reason to trade independently, then yes. But those situations are very rare where those have the earnings or have a catalyst. Majority of the time, they are gapping up or down based on the market sentiments, stock sentiments, and those sentiments are very rudimentary or weak sentiments based on yesterday demand and supply or what's happening. Let's look at the NVDA together. So now if you look at the NVDA on a 5-minute chart, look at how choppy would it be. And even the Tesla was so choppy today. Why? Because they're struggling for the direction. Does this opening range was work out? And I think I mentioned that today. I'm not sure whether I mentioned into my writing, but I mentioned to my mentor in a mentorship session in the morning that that I wouldn't be buying Nvidia here, whether it's opening range or not. And the reason, see, there's still I have still basically marked this resistance and see exactly hit that level. Why? Because this range is the multi-day, multi-weeks range is being created on the top of the side. Does this opening range is equal to any other opening range? No. So opening range doesn't mean that you need to look at the just range for today or just the pre-market. When you trade the stock, you need to see the context, where it is, where it was. Do you see that the new money can come in and buy this? So for instance, if you have missed this move and you have $1 million to invest in the Nvidia, would you be buying here? If the answer is that this if answer is yes, the new participants will come in and buy, then yeah, there is a likelihood that the opening range will work for you. But if the answer is no, and likely the answer is no, because people are taking profit here, this is not the buy zone. This is the profit taking. So any move up will likely be the best price for investors who bought it here are taking profit. Not necessarily, Deepak. You can trade the stocks, but what I'm saying that you can trade the stocks when there is a setup. So this is the setup. You can trade. And not the reason I'm saying because I can see the past, but go back and look at my market context. You can see the setup here. I showed it the stock here, and you go back and look at my context. And why the long setup is here and short setup is here. Short setup I already explained. Why is the long setup here? Let's look at it. Any guesses why did I long here? Why this opening range is better than this opening range? Any answers? Aligned with the market sentiments, intra-level resistance a bit, continuation day from few day consolidation. Okay, so let's look at it. What would be my reasoning? Let's remove this. Number one, when I see here, I see a gap here, and you know that this gap is the DXY gap. Okay. Now, market is Nasdaq or NVDA is trying to close this gap. When market has a nice consolidation or when NVDA has a nice consolidation on this rectangle, what does really mean that this is the first leg up, nice bull flag and breakout. Now, as a trader, I'd say that when the stock or market is coming down from the bottom, always be double think about breakout trades because breakout trades can be a riskier trades. So what happened here? We do not need to buy. What day is this? The February 14th. So now if you look at the 2 minutes chart and let's go to February 14th. Okay. So this is February 14 here. So here, I did not trade the opening range here. Okay. Why is the long here? And only one reason. And you can guess it now once I'm going to tell you what happened here. This was the yesterday high consolidation. Market search for the direction. Close the gap. Look at this. It's close the gap. It's retested. Move up. And you can say this low. This is high. This is lower low. And when is this break out, you can risk opening range, which is almost you go long here 3660 with 60 cent stop loss. And your target is what? Target is here to close the gap, right? You have that. And I think if you go back to my market context, I think I asked for the 138 and 139, and that's exactly 138 hit it. If you go back to my market context, which I send every day, and I can search. Do you see that? Let me just remove it. This one, and here we say that the continuation play possible momentum condition play break 136. And our target here, look at this. And if I click here again, just give me 1 second. Do you see that February 14th? So this is my friend. So it's very important, whatever the style you like, you need to spend some time, learn. Just watching one or two YouTube videos from here and there, it's not going to help you. Get the right mentor, learn technical skills, because sometimes we feel like, oh, we have a psychology issue, we have execution problem, I can't find the right entry, I do overtrade. You all those things happen is just because that you do not have the context and you're trying to force the traits without the context. So for instance, if today, if some people is forcing to go long, there's only one, you can avoid the shorts because maybe there is no more entry right now, right? Or you don't find the right entry for getting into the trend because you missed the morning move. But those who are trying to go long, there's only one reason for that, is because they lack the context.
If this resonated with you and you're ready to stop guessing, stop chasing, and finally trade with structure and clarity, join Smart Traders. We break down real setups, market traps, and institutional levels every day. Tap the link below, learn the setups, trade with confidence. See you inside.